On the 27th of January 2021, Melvin Capital finally accepted defeat and closed out their position in GameStop, losing the investment fund over $6 billion. How exactly did this happen? Well, this is the story of how one subreddit, r/WallStreetBets, cost Wall Street billions.
GameStop, the owner of Robinhood, WallStreetBets.
Shockwaves through Wall Street.
GameStop. What is going on here exactly?
First of all, it is important to talk about GameStop. GameStop is a video game retailer that has been widely popular across the Western world for years. But due to video game sales generally trending towards the online world, it has suffered dramatically since 2016. In fact, it has closed over 1,000 of its stores in the past year alone. With the obvious difficulties that the coronavirus pandemic has brought to physical shops, few are expecting it to ever recover. Professional investors, including the major hedge fund Melvin Capital, look to take advantage of GameStop's demise. Known as short selling, professional investors like Melvin Capital were basically betting that the company was going to fail. They borrowed shares in the company and sold them on immediately with a promise to buy them back at a later date. Now, if you are confident that the company will lose value, you would expect to make a profit when you buy the shares back and their price has fallen. However, if the price of the shares does the opposite and they actually rise, you're going to lose a lot of money. I have to add that this is completely legal and it is simply a type of transaction that happens thousands of times per day, and it's a key part of investing. However, many view profiting from another company's demise as immoral and even predatory. This is where Reddit got involved. The subreddit r/WallStreetBets, with over 8 million members at the time of recording, is currently the fastest growing subreddit on the whole of Reddit and plays a crucial role in this story. So what is r/WallStreetBets? Well, fundamentally, it is a community that discusses stocks, shares, and where they're going to invest money. Members openly accept that they are merely amateur traders and revel in the fact that they are. A few weeks ago, huge numbers of members started to buy GameStop, causing its share price to rise dramatically. It's safe to say that absolutely nobody saw this coming, and investment funds like Melvin Capital, who banked on it dropping in value, had to buy back their shares at a massively inflated price. So, what was the point of all this? The core reason for the initial surge in this movement's popularity on r/WallStreetBets was the genuine possibility that amateur traders on the internet could force huge hedge funds to lose an insane amount of money. When a few members of the subreddit found out exactly what investment funds like Melvin Capital had done, trying to take advantage of the demise of GameStop, they saw this as an opportunity to go the other way. In effect, looking to take revenge against the big companies seen as causing the financial crash of 2008. For members of r/WallStreetBets, although this might have been seen as a great opportunity to make some quick and easy money by virtually inflating the stock's price, that was never actually the idea. The main principle behind this whole event, and the reason for it even existing, is all about stealing from the rich and giving to the poor. As one Reddit user wrote, "These rich crooks are trying to save their short-selling butts, and it's obvious. We cannot give up now and let them keep our money." The following post from one of r/WallStreetBets mods perfectly sums up, in my opinion, the reason behind this whole thing. Now with over 35,000 upvotes, it's titled, "How did you guys manage to win so big it made these old guys drown in their tears?" People like to talk rubbish about you when you're a winner. It just comes with the territory. The way a winner responds is by keeping your head up high and enjoy living rent-free inside the minds of those who doubted you. They'll stare you down as you walk by them with a smile as wide as the sky. You don't even notice them because you're too busy basking in all the glorious tendies you've made. They hate that you played by the rules and still won. That fuzzy sensation you're feeling is called respect, and it is well earned. Wall Street no longer dismisses your presence anymore. The smart ones know that you guys do things differently and will adapt in ways to accommodate you and how you as the next generation want things done. You should all be proud of yourselves. Your time is now. On behalf of the mod team, make that money and be the change you want to see. As you can see, this post is almost like a war cry, literally rallying the users of r/WallStreetBets into continuing this effort to disrupt the status quo. It really is incredible when you think about it. The ability of one subreddit on the internet to disrupt the whole of the financial world and cost Wall Street billions and billions of dollars It's incredible. Now, in the past few days, as ever with the internet, this whole effort has expanded and it's actually become a chance to make a meme out of Wall Street. To be fair, for lots of people involved, it has always just been a laugh. There's no doubt that the internet absolutely destroying a professional investment fund's opportunity to make a lot of money is very, very amusing. But now we're seeing massive investment into other meme stocks, such as Build-A-Bear and even Dogecoin, which is currently trending at the time of recording with over 800,000 tweets and sits at an all-time high in terms of its price. Over the past week or so, many huge names have embraced the meme online. When you see people like the king of the internet right now, Elon Musk, tweeting out about the r/WallStreetBets subreddit, Mr. Beast literally buying a GameStop store, and even Corinna from the Vlog Squad tweeting out about Dogecoin, you know that this meme has gone astronomical. So as you can see, there's been a lot of hype on the internet surrounding GameStop, leading to thousands and thousands of people just like you and me wanting to get involved and invest some money themselves. Well, how do you do it? Sites such as Robinhood and Trading212 are a gateway for normal people to trade stocks and shares, and they cut out the need for a traditional broker. The idea is to open up the ability to trade to absolutely everyone, which is pretty great. Well, I say great. In reality, seeing the crazy number of new users on their platforms investing in GameStop, multiple trading websites, including Robinhood, actually disabled trading of the stock on the 27th of January. Users were unable to buy any more GameStop shares and could only sell what they already had. This saw a massive immediate decrease in stock prices. The internet, of course, was furious. How exactly was this fair? In a statement, Robinhood said, "We continuously monitor the markets and make changes where necessary. In light of recent volatility, we restricted transactions for certain securities to position closing only." Yet literally, just above this in the same exact statement, they also say, "Our mission at Robinhood is to democratize finance for all. We're proud to have created a platform that has helped everyday people from all backgrounds shape their financial futures and invest for the long term." Personally, I don't get how you can say that you're democratizing finance for all while also simultaneously disabling the ability to trade. How does that make any sense? I just don't get that. They're literally called Robin Hood, Robin Hood, steal from the rich, give to the poor and all that, but the move actually stopped normal people from benefiting. As the price came down, suddenly the rich investors who had originally invested in the stock looking to make money from its demise were the only ones that really profited. Now, while Robinhood and other sites could argue that they only stopped trade to prevent newbies or amateurs from losing a lot of money, in reality, they were really protecting Wall Street from further losses rather than protecting their own customers. I mean, personally, if you ask me, all of this seems highly illegal. As Carl says on Twitter, Robinhood cancelled stock orders on GameStop, among other stocks. There should be a class action lawsuit. I thought we had a free market. So Wall Street is okay with me losing hundreds of dollars so that rich investors can't be called out on their risks. And I completely agree with this. I don't really get how you can suddenly stop the free market, stop normal people from trading, which is the whole point of your platform, and then just let people in Wall Street minimize their losses on a bad move that they're getting found out for. Even US Representative AOC was concerned with this. She tweeted, "This is unacceptable. We now need to know more about Robinhood's decision to block retail investors from purchasing stock, while hedge funds are freely able to trade the stock as they see fit. As a member of the Financial Services CMTE, I'd support a hearing if necessary." She continues, "Inquiries into freezers should not be limited solely to Robinhood. This is a serious matter. Committee investigators should examine any retail services freezing stock purchases in the course of potential investigations, especially those allowing sales but freezing purchases like Robinhood." Now, at the time of recording, we are yet to find out if there will be any serious legal follow-up to sites like Robinhood's decisions to disable trading in GameStop. But even though trading was opened up again just the next day, the price had plummeted, saving many hedge funds billions. So, what now? So what does this all mean for the future of GameStop and trading as a whole? Well, firstly, GameStop is still failing. Sure, the owners have made a lot of money out of this event, but the reasons why GameStop was still failing in the first place are still true today. Nothing's really changed. So what if you're asking yourself now, well, should I invest in GameStop? Well, if you want to make money, the answer is definitely no. Yeah, of course, there are some people who got in early, like YouTuber A Roaring Kitty, who made a lot of money. On a whim, he purchased over $50,000 in GameStop stocks back in July 2019, making him over $10 million in 2021. But that was just lucky. Look, this was always going to be a very fake bubble which could burst at any time. As of February 2020, prices have come crashing back down to normal. But off the back of this monumental event, the question now becomes, what's to stop this ever happening again? Well, in my opinion, it definitely could, and it probably will. The main takeaway for me from this entire incident is the real power the internet has as a collective. On our own, we may have a few $100s, say, to invest each, but together we have a lot of serious money, clearly enough in this case to shock the entire financial system. I think now people are starting to realize the crazy potential internet communities such as r/WallStreetBets really have. It's safe to say that this has been one of the most compelling moments of influence we've ever seen originate from Reddit that has transcended the entirety of the internet and has had crazy real-life effects, literally costing Wall Street billions of dollars, and it's been absolutely amazing.